Welcome to my channel as I discuss the best Forex strategy for consistent profits. This strategy has been my best strategy so far. If you're on this channel watching this particular video and at the end of the day you don't make money trading Forex, please stop trading. This Forex makes me minimum of $1,000 per trade. Yes. Anytime I want to. This is the strategy that I can, to a large extent, expose my capital to the market. So if you're watching, please, before I introduce you to this strategy, I urge you to subscribe, share, comment, be part of this community. What is this strategy called? It is called a window or gap Forex trading strategy. Window or gap Forex trading strategy. That is the simplest strategy ever as long as Forex trading is concerned. Do you know why? Before I go into details, let's go to a chart and see how it looks like. You can see between this and this, there is a very big gap. The Western traders call it gap. The Japanese call it window. So I can be interchanging the usage. So please, anytime I say window, no, I'm talking of gap. Anytime I say gap, no, I'm talking of window. So this is the gap between the close and opening of another window upward. This is rally gap or bullish gap. It happens also in a bearish market. This is it. You see, there is a gap between this price and this. And this gap happens virtually in all time frame. But as a professional trader I don't trade any lower. In fact, the lowest time frame I trade is 4 hours. From 1 minute to 15 to 30 minutes and the other minutes, lower time frame, there are a lot of noise. A lot of noise going up there. So some of the strategies, some of the setups doesn't hold in those lower time frame, but in the higher time frame, they hold, they obey to a very large extent. So in a monthly chart, in a weekly chart, in 4 hours chart, in a daily chart, if you are opportuned to grab a window or a gap market, then you are in for money. Why do I say that this pair or this strategy remains the best or the simplest? Now look at it. Very easy to understand. You do not need any technical indicator or any chart pattern or any candlestick pattern for you to understand how to trade this pattern. This strategy, I will explain it in detail. It does not require any form of indicator, as I said. It works virtually in all pairs and all time frame. However, successful forex traders trade higher time frame. Then I am of opinion, if you watch all my videos, most strategies that work for the developers, the owners, does not work for you that is searching for a simple strategy. How do I mean? If I develop a strategy other than this one I'm doing now, I have other strategies I trade. There are a lot of factors that built in my strategy. There are a lot of factors such as my capital base, my risk tolerance, my personal understanding of the market, and other things. These things are built in the strategy. That is why even when you go online to search free strategies and you apply it exactly as you saw it there, most times it does not work. That is why equally people with signal providers, when they provide you signal, at the end of the day, their followers, most of them don't make money. Why? Forex is not where you follow someone blindly. No, it is something you have to understand. Why do I want to enter this market? What did I see? When will I exit? When is it that my setup is no longer a setup? These are factors you have to consider when trading Forex. Now, let's go to a chart proper and see what you do or how the chart, how the gap works. This is a very great um, this is a very great chart. I am a fan of Euro USD. And look at where the money, let me teach you how to trade this chart properly now. Watch. There is, where is it? Now, between here and here, fine. There is a gap between these two candlesticks. The market closed here and was about to open and gapped. Now, what the gap is telling you is that, okay, this market assume or wants to move further in that direction it is. Now, this is a bearish engulfing pattern, or this is a pattern, a candlestick that dropped, telling you that the sellers are in the market. Is that clear? Fine. Now, the opening candlestick shows that the momentum is downward more. If you are a trader or you want to trade this strategy, you should understand that this market, there are more sellers in the market. The force of the market is going downward. What do? You see, if you quickly trade, if you trade here to this point, you've made money. But there is something, please. Every gap usually turns to be a resistance or a support. If there is a gap in a downward trend like this, or in a downward movement, this becomes a strong resistance most times. If it is up, if the market is up and there is a gap, that gap becomes a support, mostly strong support. Now, having that in mind, usually after the gap, the market goes in the direction of the gap, then 95% of times it goes back to test that gap or to fill in that gap. To fill in that gap, look at it here. After the first day, occurred, when the gap occurred here, this is where the price opened and it moves and closed here. That means the buyers had no much strength in this market. Now the sellers took over and get to this point. You see what happened? The second day, the third day, sellers still took the market. But the fourth day, the price moved to test or fill the gap, and it filled the gap properly. The rule of trading is when the gap is filled, wait for another candle. If another candle closes bullish, then this gap has been nullified. But this gap was filled. Then the second day, a railway track occurred. That is, the whole gain was wiped away by sellers. Obviously, you have to trade downward. Now, this is fake breakout. It's for people that don't know how to trade it very well. They will say, oh, the gap has been filled. Let me just go. No. If the gap is filled, you must have a confirmation that you have to wait for another bullish candle and before the market moves in that direction. So this is a simple strategy. It does not require any technical, it all requires your understanding of the market. Hope I'm making clear. You are clear. So what I'm saying is that every gap is a support and resistance, no matter how small that gap is. What the gap is telling you that the market is ready to continue in that direction at which the gap occur. However, if you are patient enough, you can wait for the market to touch the gap, which turns to support or resistance, or you can quickly trade that pair. But what happens if, assuming there is a gap like this, and immediately the buyers fill in that gap? You have to let that gap be. You shouldn't trade it. This is the trading with high probability of success. If you are enjoying this video, please subscribe, share. If you are not clear in any point, drop your question. I can even make a new video for you to teach you more on how to trade this uh, gap. It's as simple as that. As you can see this gap now. Now, if you are a trader, this is a good buy market, a good sell market for you at any given time. Thank you for watching. Subscribe to my channel.